Welcome to Target the Trade. This is Fed Zach, Senior Trading Strategist here at CMTrading. And today we've got a trade setup that is just so simple. Anybody could do it. I mean, anybody could have jumped and taken advantage of this trade. It's just a month. But before we start, make sure to like, subscribe, and do share, especially if you find value in this presentation. All right, let's get straight into it. All right, now this trade, it doesn't take a lot to just follow a certain pattern. The markets are either going up, they're going down, or they're going sideways. And as long as you can categorize the current market conditions, you've done 80% of the work. The rest of it is just picking spots about entry levels and exit levels, and that's it. That's all there is to trading. Trading is not about anticipating and prophesizing. It's just about seeing certain market conditions that repeat themselves over and over again and then taking advantage of it. So what am I talking about? I'm talking about oil. Okay, so for the past month, oil has been trading in a range. So as before, I spoke about three market conditions. We're either uptrending, downtrending, or trading in a range. And this is probably one of the easiest trade setups that you could possibly set up in terms of looking at it. All right, so let's just jump straight into it. All right, so we've got the upper limit, that's your resistance. We've got your bottom limit, which is your support level. Now, the white hairs that you see down here are volume. They represent the volume during any day's trading. Now, if you look very closely, you'll see that every time we're going down, the volume actually dips, okay? So this is actually an indication that it's not real selling, okay? It's selling, but it's not as aggressive selling. So I wouldn't expect the market to actually break below this support level, okay? Now, below us, we have the MACD, and if you look also, every time we make that crossover is when we make our recovery at the bottom of the range to bring us back on top, and vice versa on the top. Every time we break on the top, okay, you'll see that we're actually breaking lower, and then those are your two entry points. So your entry points are down here and your exit points are up here. That's just as simple as can be. But if you look towards the end, we broke out, and the reason we broke out was because, like I said earlier, the volume when the sell-off was happening was lower. And that kind of indicated that the selling was there, but not as aggressively, and not as, in a situation where we're going to break lower and going to sell off as a result of it. So as a result of it, we actually broke out higher, and we're trading at $80 a barrel. Very easy setup, multiple places that you could have entered. There could be also some sub ranges that you could have set up here, okay? Those are the outer ranges and then the more tight ranges, and taking advantage of those increments as well, going in and out, depending how you're trading, okay? Either you're trading on a few day basis, or even if you're trading on a daily basis, okay? You're intraday trading, scalping kind of the market. There were multiple of opportunities to take advantage of it, all right? So here's a very easy case in point over the past week, over the past month actually, that has been just explosive. And specifically, I was talking about this last trade on the daily review down here of picking up at that last support level, and sure enough, it's $4 higher. All right, that's it for today. We'll see you here next time on Target the Trade. Thank you, everybody.